Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The offsetting Australian employment data last week fueled the bullish bias, and now as you can see the market is tackling the level of 69 cents. An unexpected surge on Thursday in part-time work during November may have eased the market expectations somewhat of a rate cut in February for 2020. According to the data published by the Australian Bureau of Statistics, the ABS, employment growth rebounded by 39,900 in November, roaring past the 14,500 jobcast. The previous month was revised from a negative 19,000 to 24,800. However, the market may be a little bit ahead of itself because the numbers weren't as good as I believe. Purely for the fact is that most of it was part-time. The full-time job rose by 4,200 while the part-time jobs grew by 35,700. And this might be because of the Christmas season of heavy employment for the part-time sector. The unemployment rate, however, ticked from 5.3% to 5.2%. I do believe that any advances towards this level of 69.40.55 would again bring the bears back into defence and see a market move away or reject this level and look back towards the trigger level that still holds at 68.35. The euro took up the level of 110.90 on Friday and plummeted to a fresh low of 110.65. Now, from the decline, the market is still expected to show a bearish price action because we have also got the confirmation from the technicals, from the MACD marrying up with the RSI. I do believe that we are looking down towards 110.40, but the target is at 109.50.70 before profit taking comes back into play. Any advances should find resistance now at 110.95. The dollar yen, since rejecting the level and posting an outside range day of 109.70, still holds to the bearish factor. And I do believe we are looking to 108.90. Now, a break beneath there would give further scope to 108.20, still holding as the objective, or maybe extending to 107.50. The pound is still remaining weak and still keeping to its objective of 129.10. I do anticipate that we will see further weakness due to the fact that technicals are remaining bearish, so any advancement should be limited. The gold still posing a threat to the upside. Now, a break above 1,482 would give further scope to a target of 1,490 to 1,498 to 1,500. Any pullback expected to be shallow. And as anticipated, the retreat from 61, because that was the objective, the market plummeted nearly 1% on Friday for oil and now looks towards a target of $58 a barrel and reassess from there, as we could see a rebound, as I've outlined here. So let's see if that happens. But most probably find that due to this week that we are going into a short week due to the Christmas period or the festive season, could bring a little bit of light volume, so we may see a bit of a slow now into this festive period. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new week.